Hello, everybody. We will get started in just a few minutes as people join. See a few familiar names already. Another minute. All right. Well, I think we'll get started. First of all, welcome everybody, and thank you very much for taking time out of your busy day to join us today. My name is Bill Passion. I am one of the co-founders of Mosaic AI. I've been in the enterprise technology space for the last 25 years, located here in Chicago. And really, the purpose of today's webinar is to really bring clarity and some education to the Jade opportunity, which I think you're all familiar with, and also that of the Mosaic AI platform. We are going to do that with three fabulous panelists. First, Nick McGinn. He is the CEO of First Capital Advisors. He is our sponsor partner on this initial Jade opportunity. He's going to walk you through some FCA history and then also the details around the Jade. We also have Steve Horvath with us. He is the founder of CRE Advising, which is a full service commercial real estate firm located here in Chicago. Steve is a very close partner of Mosaic AI. When we think about and evaluate properties to onboard onto the Mosaic platform, it really has to pass that kind of rigorous sniff test that Steve brings to the table. And then we will close it out with Somnath Banerjee, one of my fellow co-founders here at Mosaic. We call him the tech guru. You can see by his backdrop, he's a Bay Area veteran, and he's going to walk you through some different components at the very high level around the Mosaic platform, but also I think dig a little deeper into tokenization. Couple quick things before I kick it over to Nick. One is we know people on this call. We've talked to some of the attendees today. If anybody, we've certainly done our share of one-on-one meetings regarding Mosaic and the Jade opportunity, dozens in the last 2 weeks. If anybody wants to just reach out directly, do not hesitate. We'll tee up a Zoom, a phone call, whatever it is you're looking for. Just reach out to Steve or myself, and we'll get that going. On the Q&A side, so the plan here is to wait till after Somnath is done, and I will verbalize all questions. If for some reason we don't get through Q&A, rest assured all of these questions are tracked in a log, and we will provide a full transcript of all Q&A to all attendees later this week by Friday. So again, thank you all for coming. We are accessible. I am going to turn it over to our good friend, Nick McGinn.
All right, Bill, thank you very much. I appreciate it. As Bill explained, I am Nick McGinn. I am the CEO of First Capital Advisors. First Capital Advisors was founded in 2013. We are an affiliate of First Trust Portfolios. Many of you probably know First Trust, but for those of you who don't, First Trust is a large financial asset manager. They are the fifth, sixth, or seventh largest ETF company in the United States, depending on which survey you look at. This slide shows that they have 180 billion of total assets under management. I believe it is over $200 billion of assets under management. So a pretty large firm, and we are happy and proud to be part of that family. Since being founded in 2013, we have completed over 40 investments with a total property value exceeding $500 million. And on the equity side, that is over $200 million of cash equity invested. And I dug this up a little bit. We have 23 total apartment properties. So the bulk of our portfolio has been concentrated in apartment. We have done 13 retail/commercial properties direct investment, and then 11 passive investments along the way. So it's actually a total of 47. We are a full CRE life cycle expertise, including acquisitions, dispositions, property management, marketing, financial analysis, accounting. All of it's required when you're buying and managing real estate. In some of our properties, we manage the properties ourselves. And in other cases, such as a lot of our multifamily properties in Texas, we have third-party property managers overseeing those. In total, we have 12 employees at this point, a handful in Texas overseeing our portfolio there, and then the rest up here in Illinois. On the track record side, we have exited 11 investments on the multifamily side, and the realized return on those, and this is a gross level return, and by gross, it means the total return at the deal level. The profit is split from there, but the gross level return for those 11 investments was 19.6%. And we have also a pretty large existing multifamily portfolio of 12 properties, and the projected returns are over 16% IRR and at 2x multiple on equity invested. So just real quick before we jump into the Jade, a little background on me is I've been with the firm for 10 years. So the firm was founded in 2013. I joined in 2015, and I've been the CEO for the last 4 years. Prior to this position, I worked at a couple of firms with concentration in the commercial real estate appraisal business, all different property types, including multifamily, office, retail, et cetera. So that's where a lot of my background is on the valuation side of things. So jumping over to the Jade, which is one of the main reasons everyone's on the call today, I have way too much information on the Jade. So this is going to scratch the surface. And if you have questions, please write them down and ask them, and we can follow up with as much information as you'd like. But the basics of the Jade, it is a multifamily property. It was built just a year ago. It was completed in August of 2024. So exactly a year ago, it was completed. It's in Darien. You can see the size there. That doesn't mean, I guess, a ton in terms of total square foot, but it is 70 apartment units with 24 one-bedroom apartments and 46 two-bedroom apartments. It's got a healthy parking ratio, which is actually fantastic. The current occupancy listed here in July 2025 was 94.3%. And I made a note, today we're actually sitting at 97.1%, and we're 98.6% in terms of leased, meaning there's another unit that's leased that isn't yet occupied. So we're in great shape there. When we purchased this property in February of 2025, it was only 62% occupied. And over the course of 2.5 months after we purchased it, we were able to get up to that 94, 95% level, which was a really good achievement. And the majority of the reason we got there is because our team worked really hard. But the other reason we got there is that DuPage County's multifamily market and just housing market in general is really strong right now. So we were able to get a lot of good traffic at the property and we leased it up. But zooming out real quick before we move forward, I'll kind of give a little background about why we bought the Jade and why I know it's a good investment. The reason we bought it is we own a property down the street. It's about 2.5 miles away. It's called Waterfall Glen Apartments. It's right on the other side. It's a little bit southeast of the Jade, right on the other side of Argonne National Lab. And it's a 1970s property, and we've done a lot of renovations there. We've owned it since 2019. And that property has done extremely well for us. In 2024, we averaged 97.2% occupancy. That's average throughout the year. It's really hard to do. It's gone extremely well. The staff that we've built there is great. They had a little excess capacity. And so when we saw that this property was coming on the market, we thought it had potential for us to add it to the operation, essentially, which we could do very efficiently from an operating perspective. And we've done that. So we actually only added one full-time employee, which is the maintenance person at the Jade. And that is very efficient from a cost perspective. So that's really the main reason that we bought this property. The other property, Waterfall Glen, is actually cash flowing at a 12% rate, which is extremely high for a multifamily property. And we're hoping we can do really well at this property as well. I don't think we'll get to a 12% cash flow. I'm not going to sit here and promise something like that, but I think we can do really well. So those things have come to fruition since we purchased the property in February of 2025. We have stabilized the asset. We've leased it up. We've added our one staff member, and the property is operating well now. So in terms of the underwriting and what we're projecting for investment returns, these numbers were in place a few weeks ago. Last week, we had a big win on the tax side, on the real estate tax side. And our assessment for 2025 was published at $16 million. And our tax consultant was able to argue it down to $7.5 million, essentially cutting our tax bill for 2025. So that has influenced, first of all, year one taxes, year one operating expenses, and it's likely to have a positive influence on future expenses as well. But what we were projecting a few years ago, and this has bumped up a little bit since then. And what we're going to do, Bill, I think, right, we're going to circulate some new numbers relatively shortly here, which reflect the positive development that we had last week. But one aspect of this deal that's important, when you're able to buy a new asset that's not going to need a ton of work, you're able to start distributing cash kind of right off the bat, which is great. And we do quarterly distributions. And we are estimating an average cash on cash yield over the length of the hold period of 6.5%. We're going to come out of the gate a little lower than that, but the plan is to build up to higher than that. So we'll probably come out of the gate closer to 5 and build up from there. And that's exactly what we did down the street. We ended up significantly higher than we started. So we want to produce consistent cash on cash yield dividends to investors of 6.5% per year. There's a tax equivalent yield listed here. One of the great things about real estate in general, and especially multifamily real estate, is depreciation. And that reduces your tax burden, your income tax burden. And a tax equivalent yield here is listed. That is designed to be the return at which you would need to achieve on a fully taxable investment to equal the cash flow that you would have here. Your cash flow is fully protected. Check with your tax advisor. But the design here, given the depreciation that we're going to be able to achieve, including significant year one bonus depreciation, is very strong cash flow with very little taxable income, and that's the goal. The target hold period for this deal is 5 to 10 years. We are going to get a loan. We are in the process of refinancing, and when we refinance, that's when we will bring in new equity investors. We are going to get a 10-year fixed rate loan through Fannie Mae. And our plan is to hold this property from 5 to 10 years. Want to get consistent cash flow to the investors for the first 5, get rolling. And then after that, we'll kind of feel out the market. If we get a really strong market, we get some positive, well, some low interest rates and have a real increase in valuations across the board. If we find ourselves in a strong market, we will look to sell somewhere in the 5 to 10 year range. We don't necessarily need to wait the whole 10 years, and we won't necessarily do that. The projected IRR for this deal, the annualized return after all is said and done, again, here is 9.1. After the positive developments we've had, it should bump up a little from there, and we will update that. The equity return multiple is listed at 2.1. That will likely bump up a little bit as well. The goal here is to get this positive cash flow, tax advantaged, right out of the gate, earn it for several years. Say over the first 6 or 7 years, you earn 50% of your original investment back, and then you go and sell and have a windfall from the sale. So that's kind of the design from the investment perspective.
Thank you.
Yep.
And to Nick's point, the whole tax issue and the benefits associated with, I think, better math across the board. For those that haven't accepted the invite and gone into the Jade microsite, there's a return calculator. So we just wanted to make sure that we had all the numbers triple checked before we presented updated numbers, and also that had to mirror that return calculator that you can use on the microsite. So we just wanted everything in sync. But thanks for that. Thanks for bringing that up, Nick. Appreciate it.
Yep, sounds good. This is the kind of a glimpse of where the capital stack stands today. As mentioned, we purchased the property back in February of 2025. At that time, we obtained a bridge loan because the property was only 62% occupied. So what we've done over the last several months is lease up and stabilize the property so that we can now refinance out of that bridge loan and into a long-term fixed rate mortgage. And right now, the total capital stack is $20.2 million. The loan that we have right now is $12.45 million, and the equity is $7.75 million. And what we're doing in terms of the equity recapitalization, bringing in new investors, is we're simply bringing in new investors and paying off our parent company to some degree. And the parent company, First Trust, as well as FCA, will remain invested, which is one of the main concepts to make sure our interests are always aligned, as we will stay heavily invested in every deal that we do. But we will stay invested for more than 10% after the refinance is complete. So you see FCA and FT affiliated entities right there at 1 million. Family office institutional will remain in for about 4.75 million. And the allocation that we've made to the Mosaic investors is 2 million. So in terms of the profit splits, we have a little bit of glimpse of that here. There is a preferred return to all the investors up to a 7% annualized return. So as we go along with the deal, the sponsor, will not share in profits on the deal until all the investors receive both their original money back and 7% annualized return on top of that. Only after that is achieved do we start to share in the profit. And after that level, after that 7% level, the sponsor starts to receive 20% of the profit after that. And then if we achieve an IRR over 11, we share in a slightly larger piece. But as discussed, this is viewed as a lower risk, lower return investment. It's likely an IRR in the 10% ballpark at the end of the day. So I don't envision us breaking into the all the way up to maybe like the 40% promote sector, but perhaps we end up in an 11 or 12% IRR if we're lucky. So that's kind of a glimpse at how the profits are split with the deal. And I think that is the extent of what I'm covering. So I will kick it back to you, Bill, unless I'm wrong.
Now, Nick, thank you so much. Appreciate all the detail. And next up, we have Mr. Steve Horvath. Steve.
Thanks, Bill. Steve Horvath. I'm the founder of CRE Advising, which is a commercial real estate company that focuses in all sectors of commercial real estate, from multifamily to industrial to retail to net lease investment sales, assemblages for development sites. And I've been in the business for over 22 years. I've closed through leasing or sales over $2.5 billion in transactions. And I'm really excited about the relationship that we have with MosaicAI and sponsors like Nick. Our responsibility is to look at possible onboardings of assets, and I wanted to share some deal highlights with all of you that check a lot of boxes that makes us feel really good about the Jade investment and project with Mosaic. So one of the first deal highlights that you want to consider in any investment like this is a qualified sponsor. And you just heard from Nick with First Capital and their history, so I won't go into that vetting, but it's significant, very comfortable with that, and you want to know that there's a qualified sponsor with great track record and history before you invest in any type of capital into a deal. This asset is stabilized and, as Nick said, low risk. It's not sexy and showing you big potential returns, but it is a great asset for Mosaic to load through the process and offer up to investors something that really just wasn't really ever in the marketplace, of small investment amounts from $10,000 to $200,000 that people can put into an asset class and ride alongside a qualified sponsor. Income is in line with market, right? You want to look at any investment like that and understand that rents that are being achieved in the investment are in line with market. You don't want those to be inflated by 20% and be buying into an investment that is above market rents. So that is a qualifier that is great to know and check the box. The location, Nick mentioned a little bit about this, but the location is incredible. It's in an area in DuPage County that is thriving, live, work, play community. DuPage County is one of the strongest counties in the United States, so it certainly checked that box. The return on investment starts quickly. We've known through the investment portfolio that Nick's team and sponsorship pays the returns depending on the investment made on a quarterly basis. And since this is stabilized at 97%, one of the great things for any investors coming into this deal is that you're going to receive your first quarterly distribution fairly quickly after you make and it closes for the investment. And that is great to get investors a return on capital. We know that it is a lower risk, and with lower risk investments come lower returns. But over the time in the projection of the 5-10 year hold, it certainly is a great opportunity for people to put capital to work. We look at other benefits that there could be with assets. In this particular case, Nick has explained that through the deal structure, they've achieved the depreciation benefit that if you talk to your accountant or financial expert, a 50% depreciation benefit in year one. So if you make a $50,000 investment into it and you're going to get a depreciation benefit of 50% of that year one, that's a really significant asset to this investment that is being provided. The potential exit timing when the market is favorable. There's a lot of different opportunities and people chasing capital and deals that they will look at that and they have a typical hold time based on their capital stack of how they do things and they buy hold for 3 years and then they want to sell. And the structure of this and the sponsors timing being flexible to the market is very favorable to any investor into this because if they see an opportunity where there's some cap rate compression and they can get favorable market conditions to sell at a particular time at a higher sale price, they're going to take advantage of that. And if not, the property will produce, hopefully those projected returns, and you're just going to keep collecting your investment revenue from it, and they will look based on their expertise for that favorable market time. And so exit timing being flexible is another asset. The amount of investment required is just really rare. This is the brilliance of what Somnath is going to talk about that they've created through MosaicAI that's revolutionizing commercial real estate investing and allowing investors to come in at a rare entry level. These types of investments over, the time to the capital stack have been really big check sizes, and being able to come in at a $10,000 to $200,000 investment is incredible. Safe cash flow until exit. They're willing to take a win, as I mentioned, if the market is favorable. But at that time, you can recirculate capital into other investments. So it's another benefit to the deal. And easy reporting through MosaicAI. Somnath will also talk about the AI platform that stands behind all of this, and it is incredible for the ease of reporting. So those were the deal highlights I wanted to share with you that CRE Advising and myself looked at when we checked through the Jade and documents and why we were so favorable in putting this up through the MosaicAI opportunity of investment.
Steve Horvath, thank you very much, sir. I will stop sharing Somnath and let you take control. And you're still on mute, by the way. And you're still on mute. All right, there you go. I think now you should be good. There you go.
Now I'm allowed to speak. Thank you so much.
No, just one quick comment on Steve's presentation, and that is, I think, that is geared. It's geared, I think, to the novice or first time investor on the commercial real estate side, or as I like to say, me, in that instance. And I think as we segue into Somnath, one of the things that I've heard dozens of times in the last year, month, 2 weeks from the astute real estate investor about just how they view Mosaic investments. And it's one word, it's liquidity, right? So I think you'll get a dose of that from Somnath. So Somnath, I can see your screen, but you're going to have to maximize there, pal, and then you'll be good to go.
Thank you. Just
Perfect. Looks great.
You all can hear me and see my screen?
Yep.
First of all, thank you so much for coming here and listening to this presentation. Somnath Banerjee, I'm the co-founder of MosaicAI, and my background is technology with focus on AI and blockchain. I have provided my email address, my LinkedIn, and also whenever you want you can book an appointment with me. I'm always excited to talk about tokenizing real world assets. What tokenization does, it will democratize access, which I'll cover throughout the course of my presentation. It should unlock liquidity, but we'll do it in a completely regulatory compliant way. And we are using two state-of-the-art technologies, AI and blockchain, to facilitate that. So without further ado, let's first ask, what is this tokenization? You will keep hearing about this term called phygital, physical and digital. So when you have an actual physical asset, we create a digital replica of that on a blockchain. Now that digital replica represents a real world asset. You will hear RWA. A real world asset can be a piece of real estate, it can be commodities, it can be art, stock certificates, or currencies. The idea of making this digital replica is to create the ownership rights on a blockchain so that you can track them, you can trade them, you can buy or sell them. This actually creates the fractionalization of the larger assets so that access becomes simpler. We also can enforce the compliance rules. The compliance rules are things like KYC AML or accreditation debt investors. This also improves the entire automation of the process, which reduces time and cost. But the biggest benefit is to unlock liquidity of an otherwise illiquid asset. So if this is the high level concept, I want to spend a minute on understanding how big is this RWA market. If you go to analytics sites like app.rwa.xyz, I left a link in the presentation. Currently, the RWA on-chain market is about 26 billion. There are about 367K asset holders, and it is growing very, very fast, as you can see through the growth percentage. And there, the asset issuers are 268. To put it in perspective, the asset issuers in this particular case, when we tokenize Jade and Nick will be the asset issuers. The people who come in and make an investment in Jade will have one of the asset holders. So they will represent one of the 367K. Now, while this growth is interesting, what experts from McKinsey or Deloitte are projecting, this growth will be phenomenal in the next 5 to 10 years. So Deloitte projects that the tokenized real estate market could become 4 trillion by 2035, and I've left the links of those industry research reports for you. So while we talk about this bigger RWA, there is one particular subsegment which has not even been counted in the RWA, but that requires very, very special mention. Those are stable coins. Stable coins are already a 267 billion market. It has found a product market fit. What is stablecoins? First of all, when we think about these larger, complicated assets like real estate and currencies or commodities, but stablecoins are you take a US dollar bill and you create a crypto replica of that. So always one stablecoin would be pegged to $1. And the people who issue these stablecoins are people like USDC from Circle. Circle just went public in June 2025, 2 months back, and they had an amazing run. The foundational thesis of stablecoin is you can transfer money in less than a second, in less than a second. This will be a huge disruptor, and it is already, if you'll focus on the right-hand side of the screen, you will see the last 12 months transaction volume of stablecoins are 33 billion. Yes, it is more than Visa and PayPal combined. And that is the reason all these payment processors like PayPal are issuing their own stablecoin. And people like Visa also wants a piece of that action. So the reason I wanted to mention this, it is probably one of the simplest examples of real world asset tokenization. In this case, the real world asset is a dollar bill. So while we talk about the simplest, we at Mosaic AI made a deliberate decision to tokenize commercial real estate. The reason is not only it's the largest asset class in the planet, not only it is very, very sophisticated and complex, but it has its own challenges. And we try to list out some of the challenges. There is significant information asymmetry in this. What do I mean by that? When you look up your asset price in the property tax documents, that may not be its latest valuation. So that's one example. Transaction times could be significant, 6 to 18 months. There is no automated due diligence. You always have to call an appraiser and wait for 30 days and go through that appraisal process. There is no way for investors to come in and very quickly do a due diligence. So while we're building out the tokenization platform, we have also built out the underpinnings. We have collected many, many properties thanks to Steve Horvath and team, and we have actually built our AI to understand the rent rolls. So to automate the analysis of rent rolls. We've also built lease abstraction modules so that we can go through hundreds, thousands of leases and extract the key facts and then do analysis on top of that. All of this feeds into our automated valuation models. So whenever your data gets updated, your rent rolls get updated, or your leases get updated, we can recompute the automated valuation and that gets transferred to the token valuations. So what we have built is we will address the information asymmetry with the combination of AI and human experts. Our target is to bring the transaction time drastically in smaller units. However, the AI-powered due diligence and AI-powered valuation models will be key in this platform, and that will all unlock liquidity. Again, the way we are doing it is a combination of AI and blockchains. We have built a set of autonomous AI agents. They never go to sleep. They're always on 24/7. They never take an emotional decision. When the market is down, they don't do a panic sell or give some overambitious things. They're always data-driven. And these AI agents can be used for a whole bunch of things. But right now, we are using them for conducting due diligence, onboarding investors like you, or generating the reporting, as Steve mentioned, generating the K1s, or continuously monitoring, trying to find out how is this asset performing. On the other side, the blockchain side, is we create digital security tokens, which are very, very secure and tamper resistant. Those security tokens will represent fractional ownership and they will enhance liquidity. However, while doing this, what we try to do is confirm by a standard called ERC 3643. That standard actually enforces compliance. So when your wallet tries to interact with an investment, it checks for markers. Have you completed your KYC? Have you completed your AML? Or have you passed the accreditation investor check? Those are automatically done using a platform called Parallel, and your wallet should be marked with that. Then and only then you will be able to participate in this investment. Finally, we have partnered with institutional grade wallet providers like Fireblocks, where your assets would be custodied and kept with the highest level of security and privacy. So those are the high level bullet points of AI and blockchain. So at the end of the day, what we are trying to do is make access to these sought after asset class easy. So you can get in with as little as 10K. But while doing this, you have to be compliant with KYC AML accreditation. We have tried to automate this whole thing so that everything could be done within minutes. And all of this will unlock liquidity. The technology architecture that we have built out, and I'm using a fictitious asset called Dreamscape Manor. So let's say it is valued at 25 million. using blockchain smart contracts, we tokenize it, we mint 500 tokens, $10,000, because we are recapping about 5 million of this 25 million asset. So a primary buyer can come in and buy this security token for 10,000. So that access is now much reduced. They don't have to put up a much larger amount. So it provides that fractional access. The second thing is within the first quarter, if everything goes okay, then you'll get a distribution income. And guess what? You don't have to wait for a check or anything to arrive. It will show up on your crypto wallet. And that reduces the cost for the issuer. That also makes your investment journey much simpler. Now, after waiting for the lock-in period, the primary buyer can decide that, hey, I don't want to wait for that long period of 5 to 10 years. I want to get out of this investment. So they can list, we have created a private venue for buying and selling these. So when the lockup period is over, you can list your token for sale. And as long as there is a buyer on the other side, you can do that transaction. So 3 benefits: getting in with a fractional access, getting the distribution income in an automated fashion, and finally being able to sell your investments right after the lock-in period is over. And all of this will enhance the liquidity. The tokens will look like this. We have modeled it deliberately like a boarding pass on an airlines. It will have the picture of the asset. It will have significant information which will be updated regularly, just like airlines update your boarding pass when gates change. So whenever Nick goes through a repricing or the equity value changes or the net operating income changes, all these numbers will get updated. And also on the flip side of this token, there are much more detailed information and documentation. So this is the architecture that we have built up using a combination of AI and blockchain. Very excited about this platform. And again, I cannot thank you enough. Feel free to reach out to me anytime, schedule an appointment. I'm going to leave this link in the chat room. This presentation will be available to all of you. So with that, I will conclude my presentation and hand it over to Bill to carry on the balance of the presentation.
Thank you, Somnath. Much appreciated. Great job. And I think just one FAQ that or topic that we have seen and talked about with many folks the last couple of weeks is if tokenization is too much to comprehend right now to really think about. We have plenty of people that are coming into the Jade just as similar, exactly like a paper real estate deal, but at a fractional level. So in theory, you have to hold that token for a year before you can sell it, for instance. So we absolutely will be conducting educational seminars on what does tokenization means. You have a year to decide. So we just want to drive home the point that a $25,000 investment in Jade, if you so choose, is just as if you were fractionally investing in that asset without writing a big check into the Jade asset itself. So with that, we got a couple questions, and we're very transparent. So I think I got this right. And Nick, this might be for you, and you may punt by saying ask your accountant, but I'll give it to you anyway. The tax equivalent yield of around 10%, does it get reduced at the end when we do depreciation recapture? Oh, I got to ask you to unmute. Sorry, buddy.
Yes, thank you. Yes, depreciation recapture is definitely a real thing. And that is something that will be realized eventually. Again, I mean, this is definitely something to talk to an accountant about, but the big benefit of front-loading depreciation and not realizing it for the first handful of years is the time value of money. And also, the depreciation recapture rate is often significantly lower than your full-blown income tax rate. But that's all. I'm barely even qualified to say that. So that's probably all I should say. And really, we have schedules and information that has been blessed by our accountant, and we can share that information. But I definitely think you could, if you'd like that info, reach out. We'll provide it. You could perhaps send it to your accountant and see if they understand it and agree with the methodology.
Thank you, Nick. Second question is, would an investment in Mosaic AI, again, you're investing via Mosaic AI, into the Jade, be eligible for a 1031 rollover situation? So we have addressed this. This is on our roadmap for H1 or H1, H2, middle part of 2026. As of today, no, not eligible for a 1031, but we are working through the mechanics to ensure that in the next 10 months we have that capability. Next question, I think, is for you, Nick. So what kind of returns did First Trust and other early investors see when they exited? And how does that compare to what new investors are being told to expect if they buy in now? I think we can align that with the Jade, right? So we're at the tail end of this, particular investment, right? You've already raised capital. So I think the question pertains to that. Somebody that might have invested 2 months ago into the Jade or something similar to that.
Meaning, yeah, I'm struggling a little bit with that one. So like in terms of if someone has already been invested in the deal since February of 2025, is that your impression there, Bill? That what's their return?
Yeah, I think any investor that invested in Jade, do they get similar returns to what a investor would see through the Mosaic platform?
Got it.
I think that's what
Okay.
the question is.
So yeah, I'm struggling a little bit with that one. I'm not sure if they're asking what the existing equities return will be since it's only in for a handful of months versus if we invest outside of Mosaic versus inside of Mosaic. Is there a difference in returns? I
Yeah.
don't.
Yeah,
Yeah.
we'll clarify via email and make sure we
Yeah.
get clarification, get that out to everybody. Steve, you are on mute, but you raised your hand, so I don't know. Do I have to ask you to unmute? It's not letting me, so you should be able to speak. Hold on 1 second here. Yeah, you should be able. Hold on. Hold on. There you go, Steve.
Good.
Go
Yeah.
ahead.
And thanks, Bill. I was echoing the same thing and are you going to touch on the second part of the question? Is it?
The 2 million?
Yeah.
I was.
Okay, go ahead.
Let me give my perspective and then feel
Yeah.
free to share yours. So on the 2 million, we felt that was a good number for property number one. We didn't want to bite off more than we could chew. We knew the sponsor. It was located in DuPage County, near where certainly I am and other members of the team are. So really the 2 million from a Mosaic perspective was a good fit, right? But I'll let Steve garnish those thoughts with whatever is on his mind.
Yeah, I think the participant has some great questions. And so regarding number two, I just wanted to let them know that yes, there is total transparency in the numbers. They're asking about, do you get to see things like P&Ls and rent rolls and budgets and all of that stuff is qualified through the sponsor and disclosed so that you have transparency into how the investment is running.
Thank you, sir. So the next question is, so it's relative to fees, and if the asset is tokenized, right? So you have custody and admin costs versus a tokenized structure. So I think, I personally go back to two things. One is just access at a fractional level, right? Versus the individual writing the $500,000 check. But secondly, and this is a direct quote from a global CEO of capital markets for, I'll call it a top three global commercial real estate firm. And he said, look, once you tokenize and have the liquidity capability after a year, in theory, that is worth more than the same priced asset as it exists on paper with a 7 to 10-year hold. So there is a premium for tokenization. And so we try to align that with, the small fee that one incurs when investing in the Jade through Mosaic.
Yeah, and Bill, I can expand on that also. As I mentioned, the Jade being a stabilized multifamily deal, to be able to invest fractionally into a deal like that is scarcity in the market, is very rare. Maybe it would be a friends and family type of thing that somebody's got a relationship and they let somebody, come in for a piece of it, but it's rare. We've talked also for participants, and I use this analogy, the Jade being Class A multifamily asset, think of whatever town you live in, a Chick-fil-A that has a 20-year lease on it, and brand newly built building, right? Extremely hard for an investor without capital partners or somebody to get into an investment like that and get a return from a trophy asset in a great location with a strong tenant with a long-term lease. And so those types of investment opportunities and assets are really hard to enter into the marketplace with for smaller dollar values. And so that is going to be a little bit of the difference of the fee structure that the participant was asking about and why it's there.
Thank you, Steve. Nick, this is for you. I don't know if you're going to reveal your secret sauce, but dramatic reduction in assessed value. Can you explain how your appraiser, real estate tax appeal firm, secured such a dramatic reduction?
Yes and no. I was shocked at the amount of the reduction, to be completely honest with you. It's very common to get relief from the assessor if you have high vacancy in a commercial property, like retail or office, because it's really hard and expensive to get that space occupied again. It's abnormal to get such relief from an assessor on a multifamily property. When we purchased the property in February, it was 60% occupied. The assessor values the property as of January 1 of every year. So on January 1 of 2025, that's theoretically when they were supposed to provide the value of the property, and it was 60% occupancy, or 60% occupied. Our tax consultant appears to have a very good relationship with this particular township assessor. And that is basically what I'll say, because I think the amount of the reduction that we got, like I said, shocked me, and I'm very pleased with it. We had a different tax appeal firm up until a couple years ago, and we've been working with this new firm for a couple years. And at every turn, we have overachieved what we expected to achieve. And a note on the tax expense is real estate taxes are always your number one biggest expense at properties. And that's our case here. If you can control that expense, that's going to determine, by and large, that can very well determine your success or failure at an investment like this. I feel really good about the tax piece. I don't know how to explain it other than it was argued based on a lower occupancy, January 1 of 2025. And we got lucky, I guess, or our tax consultant really has an amazing relationship with the assessor.
Thanks, Nick. Last question, unless anybody wants to fire one back. So Do shares that aren't tokenized get a better deal? Short answer to that is no. It's all the same fee. And is there a way to see all of this net of fees side by side to compare? So everything that we showed on that return slide is net of all fees. And so we will recirculate the updated numbers, I assume by Friday, if not, late in the day tomorrow. And so you'll be able to do that simple math yourself. So anything that we present in terms of IRR, cash on cash, is net of all fees. So good question. So if no one has any other questions, I think again, we're very grateful that you took time out of your day to spend it with the team here, learn more about what we're doing at Mosaic, the Jade opportunity. Again, can't stress enough. Anyone has any questions, Steve and I are pretty much on the phone 24/7 these days. So do please reach out, and everyone will get an audited Q&A log of what we talked about today, along with the updated numbers. So on behalf of everybody on the call, thank you so much for joining, and have a wonderful day.
Yes, thank you all. Thanks, Bill.
Thanks, everyone.